Good morning. Barra Resources has long held a dual commodity focus, a dual commodity strategy with our wonderful gold assets around Coolgardie and our cobalt project down near Norseman, all located within the great mining state of Western Australia. Today we're very pleased to announce that we've published the long-awaited pre-feasibility study on the Mount Thirsty cobalt nickel project, and we've now taken our place as an advanced, high-grade, low capex and undervalued cobalt nickel project. We're publishing an ore reserve as well, which is a tremendous privilege that we get with our pre-feasibility study. And the key message, of course, is that being located in Western Australia and a commodity like cobalt, which is currently at the bottom of the cycle set to rebound, we're in this first world jurisdiction, which is critically important in a scarce commodity like cobalt, mostly coming from the DRC. So we've managed to complete our pre-feasibility study with positive economics, and that's despite where we are in the commodity price cycle. Cobalt is right at the bottom there. That's a 100-year price chart, and we're currently trading at historical lows in real terms. And cobalt does have this dynamic where it does go up and down, and for us to be delivering these economics now at this part of the cycle is a very positive thing. And we're ready to go and set to go for when that market rebounds. We are now at the front of the queue in terms of cobalt projects ready to go. The reason for that volatility and why we're quite excited about the future of cobalt pricing is, of course, because of the scarcity of cobalt. Yes, it certainly comes from DRC, and it's exposed to the same demand dynamics as your other battery metals, but the difference, of course, is its scarcity. Now, I'm not going to go through the cobalt market story in detail. We've done that many times before, but just here's a little bit of an update for you on what these current prices are doing to the world's biggest producers. So in the DRC there, you've got some very substantial mines, and for different reasons, they're all struggling at these prices. So that's another signal to me that we're at the bottom. So let's get into it. Let's get into our project. As I said, located down near Norseman, 50-50 joint venture with another ASX-listed company, Conoco. Wonderful infrastructure around Norseman, and indeed the Shire and a lot of the stakeholders around town are really eager to see us bring the workforce into that part of the world. And as I said, really proud that we've managed to get this maiden ore reserve on the table. Probable ore reserve, 18.8 million tonnes at roughly double the grade of your typical nickel laterite. And the really pleasing thing about this is over the course of the last 18 months, we've progressed from having a JORC 2004 inferred mineral resource up to now having a 2012 probable reserve. And we've done that without any drilling. We've done this through some smart quality assurance, understanding the density and the moisture of our ore body, and in terms of value for money, getting an ore reserve for what we've done, and a top quality ore reserve from the best consultants around town. We're very happy with that. So let's roll the video, Shane. I've got a little bit of a video here of our flow sheet at Mount Thirsty. As you can see, it's a substantial pit, and we're flying in here towards the plant. Reagent-wise, we'll be importing sulphur from the Port of Esperance. That's our main reagent. We burn that in air to make sulphur dioxide. And then we use that after we've ground the ore and slurried it up. We use that in atmospheric pressure. This is at 70 to 90 degrees. We don't need your big inside-out submarine, your big billion-dollar high-pressure acid leaching plant, and we leach our cobalt. And then we do some primary neutralisation. The limestone comes from Esperance as well. We run it through our CCDs, secondary neutralisation, and move on to the precipitation of our MSP product. We've picked that MSP product. It's an intermediary product. It's going to be highly sought after, but highly sought after by strategic partners. We then precipitate the manganese, which is a waste stream for us. Future opportunity there. At the moment, that's going to tails, but there is a future opportunity to make a byproduct there. The tailings are then neutralised and sent off to the tailings dump. And you can see the scale of the pit there. This is a substantial mining operation, a long mine life. We've got 12 years on the table, and there's certainly going to be opportunities for more in the future. There's an inferred deposit up to the north, and that'll just come in towards the end of the mine life there. The product will be exported, small volumes. Logistics aren't really a big deal for us. We're talking about 1 sea container per day, and that can be exported through any port in Western Australia. And when your product's worth tens of thousands of dollars per tonne, transportation costs aren't a big deal for us. Now, cobalt, of course, it's a critical mineral. It's a strategic mineral. The really key thing about this is why we've picked our mixed sulphide product. That, we believe, is going to leave some value on the table, for the partners, for the end users who have got opportunities to make a lot more money downstream with this product. We haven't sold the offtake. That is reserved for the party who wants to get involved and develop the mine. And to be really, really clear, I'm not going to be the guy turning on the key for the plant. We don't have stars in our eyes. That's going to be a job for a big global firm who really wants to put their foot on this sustainable source of cobalt. So the CapEx has come in at $371 million. That's a low CapEx when you look across the universe of cobalt projects who are typically up at around $1 billion or so. And that's fully loaded. That's been done with one of the top engineering firms in town, the Wood Group, fully loaded with all of your indirects and your owner's costs and your contingencies and growth and so on and so forth. MPV come in at $44 million, and another way to look at it is our all-in sustaining costs, which is around $35,000 per tonne cobalt, which actually lines up pretty nicely with where the spot price is at the moment. So what that means is if the project was in operation now, it would wash its own face. And then when those spikes in the cobalt come, that's when the real money is made. But the key message here, a lot of companies at this stage, you deliver a pre-feasibility study and then what's next? Oh, $10 million bankable feasibility study and so on and so forth. It's always been our strategy, and that's still the case now, that we are now targeting end users for either farm-out type arrangements or even outright sales. And now that we've got this document with a ribbon around it that's a first-rate document, we've now got the key to the door to really have the serious conversations with those firms who are expressing interest. And for the joint venture perspective, the cash burn now reverts to a minimum. We've got this study done for around $2.5 million, 1.25 Barra share, and that has been a fantastic investment. So where do we stand in the universe of Australian cobalt projects? Well, firstly, they're pretty rare, right? Most of the cobalt comes from the DRC. But we've now taken our position alongside those firms. We've got our pre-feasibility study, we've got our ore reserve, and we can rightfully now claim our position as one of the leading projects in Australia. And indeed, when you look across those metrics, you'll find that our metrics are very favourable in many aspects. Low CapEx. Typically, these guys are high-pressure acid leaching for $1 billion or so. Our project is under that. We've got our ore reserve. We've got the highest grade across the universe there. And also, we're very highly leveraged in the cobalt price. So 72% of our revenue is forecast to come from cobalt. So we are a true cobalt project with nickel credits. And then you look at the value proposition, which is just absolutely outrageous. For a 50% share in the project there, our joint venture partner is capped at $3 million, and we're capped at $11 million, the difference being our gold assets. So let's talk about our gold assets now, because now that we've done this piece of work that we're exceptionally proud of, we now move on to our gold assets and really chasing these down. We've got our Phillips Fine project up near Coolgardie, and that's certainly had some historical open pit mining, and now indeed there's greenfields targets that need to be chased down. But more immediately, we've got our Burbanks Gold Project, which has just continued to give over many, many years, and there are opportunities in front of us in the very near term to exploit that further. Historically, 420,000 ounces have come out of the ground at Burbanks at an average grade of around about 20 grams per tonne, which is a very high-grade system. We've built up the mineral resources over the years. We've done a number of drilling campaigns throughout the year and built that up now up to 145,000 ounces. We did a scoping study on that late last year, and that came out positive and gave us a real opportunity to chase down some mining partners on that project, and we believe we can drill that out further and further sweeten that opportunity. So the scoping study. The figure there shows a long section of Burbanks, and the green area there is the area identified for mining in the scoping study. The really nice thing about it is it's in virgin rock there between these historical mines, which certainly makes the mining simpler. And then there's also some remnant material in and amongst the old stopes around Birthday Gift, and there's potential there as well. It's a granted mining lease, no native title, and a very simple approvals pathway. We've got several toll treating mills nearby. The Burbanks mill's about 100 metres away. Our major shareholder, Greenfield, FMR, has got the Greenfields mill about 9 kilometres away. And from a CapEx point of view, the price tag on this one is zero. All you'd need is some working capital to get the decline down there, and away you go. So we're looking at seeing what we can do to get that opportunity up and going. Now we're going to keep growing that opportunity as well, and that opportunity was based on the drilling done in 2017 and 18, which is what that main lode resource is based on. Late last year, those Smarties you can see on the slide, that's the drill results we got from last year. That's not built into the opportunity yet, but that clearly identifies that the mineralisation extends to depth. We've got a really good understanding of the geology. We've got this northerly plunge of these systems. We think we've cracked that, and we need to now drill down plunge from some of these intersections. But as well as that northerly plunge, the real eye-opener that came out of the drilling program is that southerly dipping fault you can see up the northern end of that long section. And that is very, very significant. And the reason for that is that those high-grade hits that we got below that fault, that's a hitherto unknown fault. That's a blind mineralised position that we think potentially represents a new lode and a new discovery. And we've only got a couple of drill holes in it so far, so we're very keen to chase that one down to depth. So in summary, we've landed our pre-feasibility study. It's an advanced, high-grade, low capex and significantly undervalued cobalt project. We're really proud of the work that we've done. I'm very happy to stand behind it, and so are our engineers, and it'll really stand up to scrutiny from the types of firms who are looking to put their foot and secure their supply of cobalt. This will stand up to scrutiny from anyone in the world. We're now batting punching well above our weight with our ore reserve on the table, really sort of increasing the seriousness of what our offering is. But to be very, very clear, our preferred next step is and always has been that we wrap a ribbon around this, and now it is available for partnering, and it is set for when that cobalt price bounces back strongly. We are absolutely in the box seat. And so now we move into the gold, and we've got a fabulous gold production opportunity in front of us, and some drilling opportunities there at Burbanks, and we'll be chasing that down in the next few months. Thank you very much.